Hi, Ashwin.
Hello.
This is our first video on the first trading day of the year, 2022.
Yes.
And today I'd like to talk to you about your country and my country. Your country, Singapore, and my country, Malaysia. You know, my country is forecasting a very healthy growth of 6% this year. And I just want to say how Singapore has actually achieved it. Your economy expanded by 7.2% last year amidst the pandemic and I don't know, everything. The fastest full year growth since 2010.
Yes.
Phenomenal. And your GDP expanded by 2.6% on a seasonally adjusted basis from the previous 3 months, according to advanced estimates Monday from the Ministry of Trade and Industry, beating a median 2.1% forecast in a Bloomberg survey of economists. So really salute how Singapore is managing its economy. And I'm just wondering in today's discussion, how Malaysians, how the world can take advantage of your strong economic performance and, you know, the difference between how you run and how other countries run. I know Malaysia runs based on, we depend on our own growth to support our own economy. We have suffered a drop in FDI, I believe. You know, used to be lots of foreigners, Chinese, you know, Koreans, Japanese coming to buy our property, but now not so much. So I'm eager to hear your views.
You just talk about property, so I will hold on to that point now. Today's Singapore property market has surged to the highest in more than a decade. Let me tell everyone this, yes? And our rentals are at a 6-year high. Now, this is the difference, let me explain to you, between Singapore and Malaysia. When you model and position yourself to attract foreign wealth, it's a different ballgame altogether, Tessie. Today, Singapore is positioning itself to attract all the billionaire asset classes. All the billionaires are attracted to Singapore. So when you have that kind of frame in mind, you have the best restaurants, the best service, the best concierge, the best everything. Because you are geared, your mind is geared, I want to attract the people with money. When I attract them and I give them the best, they will easily spend money. Now, this is where, I don't mean to run anyone down, this is where other countries must learn from Singapore, including Malaysia. They must learn. How do you position your people to think that aptitude of we want to be the best so that we can make the big money? If you don't attract the big money, how can you make the big money? That is something that breaks my heart.
It breaks my heart. I think once upon a time, a long time and far away, we had a vision called 2020.
Yes.
Of course, you know, now we have visions for the future. And somehow, I don't know, as a Malaysian, I feel a little bit dejected. But, you know, the government feels we have to look after our people first.
Yes,
so,
yes.
That's why they cater for the domestic, you know, the domestic people, the domestic crowd.
Of course.
Yeah.
This is what I was telling you, Chessie, last year when we were talking about videos. We said that because it will be difficult for Bank Negara to raise interest rates, that is why investors will flock to currencies that are stronger as a result of higher interest rates. Now, let me tell you what's happened. DBS Bank now says Singapore is firmly on the recovery path with the manufacturing and services sectors driving growth. Okay? And what has amazed economists today is that activity was able to accelerate in the face of the city-state's largest and most deadly COVID-19 wave. They did it. Singapore did it. I'm not showing off, but Singapore did it once again. You know, it's amazing what they've done. I am amazed. 7.2% is a very good number.
I think it's an overall attachment to excellence.
It is the aptitude. It is really, I'm not looking down at anyone, Tessie. It is an aptitude. If you want to seek success and excellence, the thinking has got to change. This is for every country, not only Malaysia, not only Singapore, not only Hong Kong. I mean, I'm sorry to say, even Hong Kong is slipping back. Hong Kong is really slipping back. So
I want to zoom in on the opportunity in all of this for retail investors in particular, Ashwin. I want us to have a handle over what are the investment opportunities that have arisen from this so-called arbitrage, as you call it.
Now, Ceci, you remember clearly in November last year, we talked about the Singapore-Malaysia arbitrage. We said that because interest rates in Singapore will rise faster than Malaysia, there is an arbitrage where you have Malaysia, you have a low interest rate environment. Singapore, you've got a high interest rate environment. There's a lot of money to be made from here. For example, number one, if you put more money in a Singapore dollar account in Singapore, you will make more money because of higher interest rates. Secondly, look at our property market. Rental 6-year high. Property prices highest in more than a decade. That's arbitrage already compared to the Malaysian property market. Now,
so
this
is
where
a flight to quality, as you keep saying.
It's a flight to quality, like I said. As you raise interest rates, as the markets get better elsewhere, there'll be a flight to quality. And this is going to happen now. I'm not cursing anyone. I'm not doing a bad news, but it's a fact. It's coming true. Now, banks see a very high chance that Singapore will raise interest rates in 2022 in line with other countries. Now, those countries that are slow in raising interest rates will, on a FDI and global basis, in terms of global investment, will lose out. Of course, the domestic economy will prosper because interest rates are low. You have to look at things from a very, if you say that you want to take care of your people locally, then you lose out on FD.
No, I think it's a flight to quality. It's a flight to quality, and it's an attachment to being the best, but it's also protecting your currency, and by that your prices of property, your Singapore value.
I'll tell you what's happening here. Singapore traditionally has kept its currency strong. And that is why we have hundreds and billions of dollars from Indonesians who come to put money in the country. Okay? They have to keep the currency strong. For people to put money in Singapore FD, they have to keep the currency strong. And that strength in the currency has served us this way. And when the currency is strong, the people come and buy property, they will buy Singapore assets. And that's what's happening right now. Now, I want all the other countries, including Malaysia, to observe this carefully. I'm not running anyone down. When you keep your currency strong, people will naturally come and buy your assets. I know you have to take care of your local population, but this is the other side of the story that you are seeing now, Singapore. When we keep the currency strong, people come and invest.
Malaysia doesn't have the same type of economic structure as Singapore. We are a manufacturing country. Yes. And we depend on domestic trade to raise our GDP. Yes. You know, so we cannot compare apple to apple. So I believe our government has policies in place to look after our people. But at the same time, I want to step over and above that. I want to go meta. I want to talk about opportunities for retail investors in particular.
So that's what I'm saying.
Arbitrage, because of this difference.
So number one, all of course is subjective to how much money you have. Like I said, the property market is already showing an arbitrage. You've got rentals at 6-year high, you've got property prices at 10-year and more than a decade. Okay, so those who can afford it can make a lot of money there. You put your money in an FD in Singapore, you can make lots of money because interest will go up faster. Now, look at the banking sector in Singapore. I'm giving you a free tip here. We have been, over the last 12 years, Tessie, advising everybody outside of Singapore, especially Malaysia, to buy DBS Bank. Let me give you the numbers that will astound you. This is a free tip for everyone. It's the first trading day of 2022. Since the last 10 years, we have been asking our clients to buy DBS Bank. And last year or 2 years ago in March, okay, DBS Bank fell to as low as below $17 a share. You know where is it today, Tessie? $32.80. Look at the climb. It's more than 100% in just 2 years. It's better than buying any other stock outside of Asia or in Asia. Okay, that's over 100% profit, and DBS Bank pays you a dividend yield of 4% a year in Singapore dollars. It's AAA rated. Okay, DBS is a AAA rated bank, is the biggest bank in Southeast Asia, or biggest bank in Asia actually. And our clients have made a lot of money. I have a client of mine who made more than 100,000 US dollars in dividends, just from the dividend alone. Forget about the capital gains. So these are the kind of things that we look out for and we make money from on a long-term basis. So you buy DBS Bank, you can make 10% a year capital gain plus 4% interest rate. It's better than buying any bond or better than any fixed deposit. And we have been saying this year in, year out.
What is your parting word? Buy quality names in Singapore.
Again, in Singapore, in Asia, in America, in Europe, buy quality names, buy solid names. Look at DBS Bank, for example. It's the top class name in Asia. Year in, year out, 4% dividend, 10% capital gain. You will not go wrong. 2 years ago, if you had bought DBS, you would have made 100% capital gain. Is everyone listening to this? This is not a, I'm trying to hook you up, I'm trying to bluff you or hype it up. This is the fact. For the past 12 years, all our private clients have been buying DBS Bank. And we buy, when it says private clients, Tessie, we buy 5% below market. We make more money. There is a sure thing. I want everyone to know there is a sure thing in this market. When you do your research well, when you have an algorithm that looks at the big picture for you, there is a sure thing. There is. It's not just a casino. You gamble in the stock market, you make money, you lose money. No. You have to pay attention to what it's really.
You have your options trading data.
Yes.
And you have your dark pool, and you
Correct.
have other, what do you call, weapons in your arsenal to get us to buy quality names
Yes.
at discounted prices.
Now let me give you a clue. Since you mentioned the option arsenal, in the last 2 or 3 months, the big banks have been buying DBS. They've been buying DBS, and we have been telling our clients, look, the big banks are buying DBS. Go and buy. DBS in the last 3 months has climbed from 29.78 to now 32.82. And I don't think so it's going to go below 30 again. If it goes below 30, we are there to buy huge. It's a free tip for everyone. It's a free tip for everyone. If DBS Bank drops below 30, we will go and buy more than $1 million worth of shares. Free tip for everyone. Because you know where DBS is going this year? Take us on. DBS will go to $40 a share this year.
Thanks for that.
We see. Okay, if it goes to 38, 40, whatever. Even in the next 2 years, how many percent is that? It's now 32.80, 32.70.
So what do you want the viewers to take away from this recording? What do you want most?
From this recording, I want viewers to realize that this is not a child's play, try your luck, see whether win or lose. No, we are professionals, please. Listen to us. Listen to the way we do things. Listen to the way our philosophy, our psychology. Forget economic theory. It's market psychology.
It's quite formidable for Malaysian people holding ringgit or other currencies that are not as strong as the Singapore dollar to park money there in assets.
Exactly.
When there's this huge difference, in currency value.
I'll tell you why. Now, everyone, please listen to this. It's not selling myself or hyping it up. The moment you get 4% dividend a year, your ringgit depreciation risk is already covered. If your ringgit falls 3 to 5% a year, you got 4% dividend from DBS, correct? Yeah. So when you buy DBS Bank share and you get 4% dividend a year, your ringgit risk is already covered. So everything else that you make 10% a year is pure profit. So you're holding Sing dollars, okay? You already covered 4% a year for your ringgit depreciation.
Plus
and then you make capital gain 10%. So you're making clean, let me repeat, you're making clean 10% a year. Isn't that a good deal?
Which is a safer bet than holding ringgit and buying ringgit-based assets.
I don't want to put Malaysian stock market down, but this DBS stock tip is better than buying any Malaysian bank on a return basis. And that's a fact. Now, DBS Bank, like I said, and I repeat, has gone up by 100% since March 2020. This March will be 2 years. Fantastic, isn't it? Which bank in Asia give you that kind of return. Not Krung Thai Bank, not Malaysian banks, not Thai banks, not Chinese banks, not Chinese banks even. Now, this is a free tip. This is a serious 2022 first trading day of the year. Please listen to us. We don't make decisions for fun. Every single client of ours has made handsome returns buying DBS Bank, a simple stock traded in Singapore. So easy to buy. And the beautiful thing is this, another arbitrage. When you buy a stock in Malaysia, it's 1,000 shares per lot. Am I right? 1,000 shares a lot. In Singapore stocks now, the minimum is 100 shares per lot. There's no way you can't afford DBS.
Yeah.
So,
Yeah.
it's so
it's
exciting.
A sure thing almost, isn't it? It's a sure thing.
So please listen to us. Please watch our videos. Please take away tips from us. Because now, as of today, Jesse, I'm going to surprise all of you. Like I said in my last video, we have launched a different angle now. First, we have traditional investments like equities, ETFs, cryptos, FX, futures, traditional investments. We have just made our 5,000 fee more attractive. We have added for you free of charge. We have decided to make it free of charge. I talked to my directors this morning. So for $5,000 now, you are not only getting traditional asset classes investments, like I said, but you're also getting alternative asset class investments. What are these alternatives? Investment grade watches, NFTs, collectible sneakers, fine wine and whiskey. So for 5,000 US now for 12 months, you are getting the expertise of trading not only traditional asset classes, but also the new alternative asset classes. You are getting huge for only 5,000 USD a year, which works out to 400 USD a month, approximately.
Well, that's a good deal. I think for us who are going to cross over to the non-traditional asset classes, so it's a good start.
Yeah, for people who can afford it, we will do a mix because, like you know, NFTs are not cheap, watches are not cheap. We are talking investment grade watches, not normal watches. So, but I'm saying we are there, Jesse. We are there because we are here to show investment. I mean, we are here to show clients of every grade. Financial independence is achievable. Financial independence is real. And it can be done by every single human being, not only the Warren Buffett and the billionaires.
Even if it's not independence per se, it's actually financial growth. And that's what I can attest to personally, you know, having your guidance, your expertise. I think the sure-footedness and the calm, investing minus the anxiety is priceless.
Well, we are willing to take criticism and say, okay, compare what we do to anybody else. We are giving a free tip today at DBS Bank. I'm happy to give you a free tip because our clients have made so much money from DBS Bank alone. And this is Southeast Asia. Forget your JP Morgan, forget Goldman Sachs, forget UBS, forget everything.
That's a nice $10 profit there, right there.
DBS Bank since March 2020 has climbed from 1675 to now 3275. That's more than 100% profit. In your homegrown Asia or Southeast Asia, in little tiny red dot Singapore. Why?
So how do we start a portfolio with you, Ashwin? What do we need to do?
So our fee is just $5,000 US a year. Mm-hmm. We have no performance fees. After you pay us $5,000, how much money you make trading with us, everything is yours. We only charge you a salary of $5,000 US a year. And now, like I said, and with that fee, we will tell you how to make money from traditional asset classes and from alternative investment asset classes.
So now that we become your client, we put our investable capital, committed capital into an online trading house.
For traditional asset classes, you need to open an account in an online broker. We will tell you what to do. That's for traditional asset classes. For alternative asset classes, you have to physically buy watches, NFTs, fine wine, whiskey, sneakers, whatever it is. That is physical. There are two angles to this investment.
But you can bid for those things online.
Yes, of course. Of course, we will hold your hand as you go along according to how much risk you're going to take, according to how much money you have. So there are two kinds of investments now. But what I'm excited to tell you is that for only 5,000 US, you are getting your foot into two major strategies now: alternative asset classes and traditional asset classes.
I can see people who are going to set aside money and time for investing will have a lot of fun with you, because they can watch their money grow. They can get to be a part of in the direction of their income growth.
I tell you once again, everyone.
Otherwise, we just surrender our money to the banks, and then we don't know until the end, and we wait, and we just surrender.
You brought right to topic. Now let me say this: everyone watching this video, I request you humbly request you to go and watch, each and every one of you, to please go and watch the movie Matrix Resurrection. because in that movie they tell you about the red pill and the blue pill. Now let me confidently tell you, in the investment world, we are the red pill. We invite you to watch Matrix Resurrections, please, and understand it clearly. Go and watch it 2 or 3 times. We are the red pill of the investment world. Take the red pill with us. Take the red pill with us. Your risk is only $5,000 for 12 months. Take the red pill. It
requires people to plug out, Ashwin.
Yes.
Plug out of
so see, Jesse, take the red pill, spend $5,000. That's all. Spend $5,000 as a service fee. Take the red pill, and we will show you the journey.
And learn so much.
We will show you. We will show you. What does it take? What is your risk? What is your risk? $5,000 for 12 months. That's your risk. Okay. So that in the second year, you're not happy with us. Don't sign up.
I've learned how to be more strategic and less emotional.
And I think you've learned that when the whole world is jumping up and down like monkeys, you've learned to smile and say, "Let's have a whiskey soda and let this sandstorm blow." We love it. We love it when people panic when market drops 2%. We love it, Jesse. You have seen that. We love it. You know what the first thing we do when market drops 2%? Let me give you a free tip here. When market drops 2% in Asia or 3% or whatever it is, when they panic, the first thing we go and do is buy DBS Bank. Really?
We grab quality names.
Yes, we don't panic. We buy. We take our wish list. And this is real. You can be part of this as well. I'm not sitting here boasting to you and printing stories. It's true.
No. This is part of my resolution for this year. I'm going to take the reins back where investing choices and decisions is concerned.
Everyone, watch the movie. Okay, let me give you the agenda. Everyone, watch the movie Matrix Resurrection. Watch that. Number two, decide clearly if you want to take the red pill. If you want to take the red pill and make money in investments, we are the red pill. Do it. And all you have to do is what? Okay, $5,000 risk. $5,000 is your risk. Do it for 1 year. See what happens. You don't like it? Don't sign up again. It's simple as that.
Even for the risk averse, there's a limit, isn't it?
Okay, even for the risk averse, you spend $5,000, right? Then we come back again. So you spend $5,000, right? You're going to be super safe, right? Super safe. You buy DBS Bank.
People gamble that much in
Genting. People gamble that much Genting. I've seen Chinese people have gamble 100,000 in Genting in the VIP rooms. Okay, listen to this. So you want to be super safe, right? You spend $5,000, right? You just give us $5,000. Okay, super safe. So you buy DBS Bank, you will get 4% a year. What super safe you want? Out of your 5,000 to cover, you just keep on buying DBS Bank, you're getting 4% a year. Every time DBS Bank drops, you just keep on buying. From 32 to 40 is how many percent? It's a lot of money. It's 30%. From $32 to $40 a share is 28%. You make 28% on DBS Bank, you get your 4% dividend, you make 32% on DBS, your 5,000 will be covered. What risk is there? Jesse, forget about everything that I've said in the videos, okay, about all my other strategies. Just focus on DBS Bank and put us to the test. Make 28% on DBS Bank, spend $5,000 as our service fee. I'm giving you a free tip anyway now. If you don't come back to me, you'll probably go and buy DBS Bank yourself. This is my free tip to you for 2022. DBS Bank.
Thanks, Ashwin. So what is your parting word before we close? Anything?
Please don't doubt professionals. Not only me, any professionals in the talk sense, please don't doubt, because they know something. We have been in the business now for 28 years, day in, day out. We are like fishermen watching this market, knowing that at 2 o'clock in the afternoon, this fish will swim by. At 5 o'clock in the evening, this fish will swim by. So we are like fishermen, professional fishermen, sitting down there looking at the river the whole day. What fish is coming in? Suddenly there's a big crab came in. Why is a big crab here? Because something else is happening. We are fishermen. We are professional fishermen. Listen to professional fishermen who talk sense. And please do yourself a favor, make money from them.
I wish I met you earlier. So how do we contact you, Ashwin?
My email is ashwin@ppzhk.net. WhatsApp, bit.ly/algotrader. Telegram, bit.ly/algofactory. And YouTube channel, bit.ly/algowealth. Please take the red pill and please profit. Please make money. By December this year, I want to say, this is the best advice we got from you guys. We made money. We're happy. Our lives have changed. We want to hear that.
Thank you, Ashwin.
Thank
We'll
you.
see you again soon.
Thank you.